Since initiating on Cassini in mid-2015, their share price has correlated closely with the nickel price, which unfortunately has experienced one of the more difficult periods for more than the past decade. However, with renewed optimism in the sector, as well as the recently signed $36 million joint venture with Oz Minerals, we are highly optimistic regarding the future outlook for Cassini. Through this review, we take a look back at Cassini's achievements during the past year, the company's targets for the next 12 months, as well as update our valuation. The key focus for Cassini during the past year was the continued development of their flagship West Musgrave project, which consists of the Nebo-Babel nickel-copper deposits and the Sukhoth copper deposit. First at Nebo-Babel, the company released an option study which resulted in a reduction of the total capital costs, whilst also confirming the life of mine operating costs at around $3.40 per pound. Subsequently, Wood Mackenzie, an independent commodity analysis group, benchmarked the C1 cost for Nebo-Babel against other global nickel projects and found the project was in the lowest cost quartile globally, as well as being lower than all other nickel sulfide projects in Australia. This included the Nova Bollinger project, which was acquired by the Independence Group for $1.8 billion. Whilst drilling at Sukhoth resulted in an initial inferred resource of 156 million tonnes at 0.6% copper, making the total West Musgrave resource more than 800,000 tonnes of contained nickel and nearly 1.8 million tonnes of contained copper, which makes the West Musgrave project one of the largest undeveloped base metal projects in Australia. However, probably the most critical development for West Musgrave came more recently, when Cassini announced they had entered into a joint venture arrangement with Oz Minerals. The deal will see Oz Minerals earn up to a 70% interest in the project by sole funding a minimum of $36 million on project development, with Cassini being free carried through to the completion of a DFS and a decision to mine. This deal, we believe, not only validates the potential of the project by bringing in a partner of Oz Minerals stature, but also significantly reduces the financial risk associated with the project's development, given the financial backing that a partner of Oz Minerals' calibre brings to the project's future development. In addition to the joint venture, the other major event for Cassini more recently is that the nickel price appears to have finally bottomed out, with two key events pointing towards a stronger price moving forward. Firstly, the Philippines, which was the world's largest miner of nickel in 2015, announced that 18 nickel operations had suspended production due to environmental violations. It has been reported that these operations combined account for around 55% of the country's nickel output, whilst there is no timing when they will potentially reopen. Secondly, the World Bureau of Metal Statistics reported that the nickel market ended in a small deficit to the year up to August. When combined with the closure of the Filipino operations, it seems inevitable that nickel will record a deficit this year, which will be the first time it has done this in the past 5 years. And whilst the price has some way to recover, it appears the worst is now over for the sector, and the price recovery is now underway. So looking to the year ahead, we recently interviewed Cassini's Managing Director, Richard Bevan, to discuss the key targets for the company during the next 12 months.
Firstly, there's the Oz-funded work being carried out at the West Musgrave project. That really is around the ongoing development of the Nebo-Babel deposits. That work will include met drilling and also then further test work to really look at and refine the recoveries. It'll also include some resource extension drilling next year, in the first quarter of next year, to really chase some of these high-grade sulfide zones that are still remaining open. So that metallurgy work will feed into further mining optimisation studies and some infrastructure studies, give us the opportunity of looking at some of the options we have available with the project to take a more valuable project, we believe, into the next feasibility stage. Apart from the development work at Nebo Babel, we're also conducting some further exploration at the West Musgrave project. Apart from, we also have our other 100% projects, so the Mount Squires Gold project, which is also in the West Musgrave region, 50-kilometre prospective corridor, historical drilling, giving some good gold numbers, sort of 15 metres at 2.3 grams a tonne from about 30 metres from surface. Really a great opportunity, and we're looking forward to getting out there in the new year and doing some further geochem and drilling work. The West Arunta project, which is a zinc target that we drilled earlier this year. We had some good success in finding some zinc enrichment, and we really need to do some more targeting work. So the next phase of that work, once again in the new year, is to fly some EM and assist us with generating some more drill targets.
So with a number of strong catalysts in the year ahead, we have reviewed our valuation for Cassini with a new target price of 17 cents per share. Our valuation only considers Nebo Babel with a throughput of 4 million tonnes per annum. As Oz Minerals is now a partner in the project, capital constraints, which were previously the project's largest risk, have largely been removed, meaning a staged approach is now unlikely in our opinion. However, as the project is still in the scoping study stage of development, there is a degree of uncertainty regarding some of our assumptions. We therefore examined a range of scenarios with both upside and downside potential compared to our base case.